Hi, this is Dustin with Dustin's Dollars, and today I'm going to be talking real quickly about Knightscope, their current cash position, how much debt they have, and what that means for their current runway. Um, Before I begin, let me remind you that I am not a financial advisor or a financial professional of any sort. All opinions I express in this video are mine and do not represent those of any company or any other individual. I currently have a long position in Knightscope, so basically this video should be for your entertainment purposes only, because I could be wrong about everything that I say in this video. You need to do your own research before making any investment decisions. So today, as I said, I'm going to be using the information that was reported in Knightscope's most recent 10Q file just a couple days ago, and I'm going to be talking about what that means for their cash and, more to the point, their current runway, since they are losing money. And partly this was inspired, I guess you would say, from a comment that I got recently from Bailey, the investor, on a recent video. And by the way, Bailey, thank you for watching, and thank you for the great comments you've had on many of my videos. I've loved our back and forth. But one of the things that I'm going to pull out here is Bailey said, I got to look into their total debt because I feel like it's got to be enormous. Or I feel it's got to be enormous. And so I want to just cover that real quick because, obviously I care a lot about what is the debt position of the companies that I invest in. And real quick, if that's the only thing that you as a viewer want to know, I do not think that they currently have any debt. We can't know for sure. We'll know once they file their 10Q for Q1 of 2022, which we probably won't get for another 3 months or so. But as of right now, I do not think they have any debt. I'm going to walk through that real quick. And their current cash position, I think, is, not I think, they reported this. So here's one of the other bottom lines. Right here is that they have $22 million as of March 14th, which was just a couple days ago. And obviously that includes all the money that they just raised, which was about $20 million. So, they were running out of cash. And that was hopefully obvious to anybody who actually looked at their filings. And obvious in the sense that they actually had a lot of cash. They had, I want to say, $10 million on hand somewhere in like December or January. I guess it would have been December. However, they also had these convertible notes. And that's what I'm going to talk about here. So if you look at their most recent, this is from their 10Q. If you go back up here to the balance sheet, let's find balance sheet here. There it was. So they do actually list debt. They have no long-term debt. Hopefully you can see that. Hopefully it's not too small. No long-term debt, but they list these debt obligations of about $5.6 million. However, these debt obligations were actually convertible notes. And you can go down here, convertible notes. Let's see if we can find it. Yeah, so they have this whole paragraph explaining about the convertible notes. And the key point here is that they had a maturity date of January 1st, 2022. And they actually borrowed quite a lot, or I should say got quite a lot from these convertible notes, to the tune of, so they said, as of September 30th, 2021, they had like $6.6 million of borrowing. And then if you look down here at their subsequent events, you can see that after this period, they actually got another $8 million in the form of these convertible notes. So that was quite a lot. I'm not thrilled about it, but they're funding the company here at the current moment. However, so you'd think from looking at this that, hey, they have a lot of debt, but actually, again, as I said, it was originally due on January 1st, 2022. They extended it here to January 1st, 2024. And so I think that's why, if I recall correctly, and don't quote me on this, I think that they did say that they had a cash position in January. I think it was January, but I'm not sure, of like $10 million. And they were able to do that because they didn't actually pay these off. According to this, I assume they didn't pay them off because they extended this maturity date to 2024. However, they also changed the conversion terms so that they would automatically convert upon the listing of the company's Class A common stock for trading on a nationally recognized security exchange or an inter-dealer quotation system, for example, the NASDAQ. And so that is obviously what has happened with the company. And this was actually already included in, if you watch my prior video about Knightscope's fully diluted market capitalization, these shares were already included there because this is, I included these Class A shares. There's a Class A common stock outstanding before this offering as of January 18th, 2022. And so, you might wonder, how did this happen? Because none of their prior raises, to my knowledge, have been for their Class A shares. It's always been for one of these preferred classes of shares. Like I hold the preferred Series S preferred stock. That's my the shares that I hold. And if you read this footnote here, actually, I don't know if it's number 1 or number 2. One of these says, number 2 represents shares issued upon conversion of outstanding convertible notes and shares of preferred stock. But really, this the convertible notes that is the the one that matters for our discussion today. So I believe that all of that debt has been paid off in the sense that it was converted into shares. And so that, I believe, right now leaves the company, unless they have done more borrowing that we don't know about, in a position where they have 0 debt. And again, those shares were already included in my prior fully diluted market capitalization calculation that I did, where I think I landed somewhere around 56 million Class A shares if everything got converted. Don't quote me on that. You'd have to watch the prior video to see me walk through all of it and exactly what I think they were. But it's in that vicinity. So yeah, that's it. The only other thing that I wanted to address was their burn rate, right? And that is the other March 14, 2022. So they said obviously the cash balance was approximately $22 million. They also disclosed here their projected operating losses and negative cash flows of approximately $1.5 million per month. And so if they actually held this over that full time frame, you can do the simple math. 22 million divided by 1.5, that gets them 14, 15 months of runway. And so that would basically fund the company roughly through the end of May 2023 if they keep that same cash burn rate. And that's just a tad further than what I had previously estimated in my video, where I compared AITX and Knightscope's, current cash and burn rates and stuff. But so that's actually when we should expect the company to, sometime near the end of that time frame, we should expect them to look for more money, whether that's in the form of debt or equity. I think it's going to be a make or break time for the company around about that point to see, hey, if the company's made great progress, the funding that they get will probably be on pretty good terms. If they haven't made good progress, then that could be whatever they have to get in terms of funding might put the company in a very bad position. So we'll just have to wait and see on that. So hopefully I answered your questions that you had here, and thank you for